Have you ever wondered what the future of finance might look like? Well, it's evolving faster than you can say double-entry bookkeeping. The financial world is rapidly embracing digitalization, leaving behind the days of counting physical coins and notes. Now let's take the US Treasury dollar as a case in point. Once a symbol of stability and economic might, it's now primarily a relic of a bygone era as we steadily transition from cash to credit. The US Treasury dollar has had a storied past. It was a beacon of trust, an emblem of economic power, and a cornerstone of international trade. Its influence stretched far and wide, and its value was universally recognized. But today, the tangible paper dollar is giving way to the virtual world of credit. This evolution, from the physical US Treasury dollar to virtual credit, is a testament to how finance is evolving. But how did we get here? It all started with the US Treasury dollar, the backbone of the nation's economy. Our story begins in the late 18th century when the US Treasury dollar was born. Picture this, an era of horse-drawn carriages, powdered wigs, and a fledgling nation just starting to flex its economic muscles. The US Treasury dollar, first minted in 1792, became the standard unit of money, setting the stage for the United States to thrive as an economic powerhouse. In the early days, these dollars were backed by gold. That's right, every paper dollar had a corresponding amount of gold stored in the government's vaults. This was known as the gold standard. It was a time when you could walk into a bank, hand over your paper money, and walk out with an equivalent amount of gold. Sounds pretty cool, right? But as the nation grew, so did the complexity of its economy. The gold standard was abandoned in the early 20th century, and the US Treasury dollar transitioned into what we call a fiat currency. No longer tied to gold, the value of the dollar was now backed by the full faith and credit of the US government. A promise, if you will, from Uncle Sam, that your dollar is worth $1. Fast forward to the digital age and we see yet another evolution of the US Treasury dollar. Paper and coin transactions have been steadily giving way to digital transactions. With the click of a button or a swipe of a card, dollars move seamlessly from one account to another. This shift from physical to digital transactions has profoundly changed the way we interact with money, leading to the rise of credit. From gold-backed notes to government-backed fiat currency, the US Treasury dollar has come a long way. This journey paved the way for the rise of credit. And as we'll see in our next scene, this evolution is far from over. So buckle up and get ready for a glimpse into the future of finance. With the advent of technology, we witnessed a new player in the financial field: credit. And oh boy, it wasn't just a quiet entry, it came, it saw, and it certainly has conquered. But let's not get ahead of ourselves, let's start at the beginning. Credit, in its simplest form, is trust in a borrower's ability to repay. This trust-based system has its roots in ancient civilizations, believe it or not. Fast forward a few millennia and here we are, in a world where credit is as common as your morning cup of joe. The rise of credit has been nothing short of spectacular. It has fundamentally altered the way we transact, giving rise to a new economic order. No longer confined to physical cash, we now have the power to purchase goods and services with a simple swipe or tap. It's like having a financial superpower at your fingertips, isn't it? However, just like any superpower, credit comes with its own set of responsibilities. While it provides convenience and flexibility, it can also lead to excessive borrowing and potential financial instability. Remember, with great power comes great responsibility. The impact of credit on our economy is monumental. It has spurred growth, fostered innovation, and transformed businesses. But it also presents challenges, such as managing credit risk and maintaining financial stability. The transition to credit has undoubtedly revolutionized the financial world. But what does this mean for the future of finance? As we move further into the digital age, the future of finance becomes even more intriguing. We've journeyed from the evolution of US Treasury dollars to the shift towards credit. As we peer into the crystal ball of finance, we see emerging trends like cryptocurrencies and digital banks. These are not just trends, they're signs of a radical transformation. The financial landscape is ever-changing, demanding our adaptability. The future of finance is an exciting journey and we are all part of it. It's a ride you don't want to miss.